Welcome to EquitiesTracker's Learn to Invest Course 101, a practical investing course for beginners. This course is intended solely for educational purposes, and the views and opinions expressed by EquitiesTracker do not constitute any form of legal or financial advice.
You should consult your respective professional advisors who are familiar with your investment needs and other matters before making a decision to invest.
This 2-day workshop is a practical hands-on course designed to teach beginners in simple steps what investing is all about. The course will teach the techniques on how to build long-term wealth in equity markets. Participants will be guided in practical sessions on how to search for data, understand and interpret the data when tracking investment opportunities. Workbooks throughout the course will guide you to building the needed expertise.
Finding which stock to invest in has been most difficult for many investors. For most times, decisions to buy and sell stocks are more impulse-driven rather than being soundly thought out or thoroughly researched. Yet the expectation of supernormal returns, seen only in repeatable random speculation, is prevalent and persistent. This course will teach participants how to use the EquitiesTracker Plus Analyst, a systematic investment framework, to filter down to a short list of investment-grade stocks.
There are essentially 6 types of stocks in an equities market, namely, investment-grade stocks, emerging-grade stocks, cyclical stocks, turnaround stocks, sunset or failing stocks, and venture or speculative stocks. This course will focus only on investment-grade stocks, which are always profitable, always dividend-paying, always creating shareholder value, having a positive operating cash flow and a positive free cash flow. The other types of stocks will be covered in later courses, workshops and tutorials.
The course will comprise of 5 parts. Part 1 establishes the foundation and gives an introduction to different investing styles. Topics covered are the theory of investment, common information sources, the language of business and important market terminology, and last but not least, cash positions. As emphasized by Warren Buffett, accounting is the language of business. You have to learn it like a language. You can't be comfortable in a country if you aren't comfortable with the language. To be successful at business, you have to understand the underlying financial values of a business.
Part 2 will cover Benjamin Graham's investment principles, namely, adequate returns, thorough analysis, and safety of principal. Benjamin Graham was born in 1894 and lived till the age of 82. He was an American economist and professional investor. Graham is considered the first proponent of value investing, an investment approach he began teaching at Columbia Business School in 1928 and subsequently refined with David Dodd through various editions of their famous book Security Analysis, which was first published in 1934. Disciples of value investing include Warren Buffett.
The EquitiesTracker Plus Analyst essentially follows Benjamin Graham's 3 investment principles. Firstly, with adequate returns, we always need to begin with the end in mind. Determine our personal investment target based on one's retirement needs, and ensure all shortlisted stocks' historical compounded annual growth rate, or CAGR, meets or exceeds one's personal investment target. Secondly, with thorough analysis, we have to determine whether the shortlisted company has a good business franchise. We use franchise quality analysis to determine whether the company has good quality franchise indicators over time. We also need to know whether the company's present performance is faring better than its historical average by using due diligence scoring. We also check whether the company's management intentions are aligned with shareholders over time by using shareholder wealth creation or SWC scoring. Thirdly, with safety of principle, even though a company may have good FQA, DUDI and SWC scores, it may be already overpriced by the market. So it is important to use various timing tools to time one's entry.
Part 3 will cover archive resources. Archives provide the historical profile of a company. It allows us to know as much as possible about the company being invested in. Past performance and consistency are important factors, and good archives which provide accurate historical information will tell a vital story. Standardized, cleaned and normalized archive data are essential for investing. We have to select the right research tool, and we believe EquitiesTracker Plus as a research tool provides reliable archives and an analytical investment system, all of which are key to the investment research principles established by Benjamin Graham almost 8 decades ago.
Part 4 will cover timing factors and introduce the following topics, namely, comparing price versus values, which is a key to understanding investment, different styles for estimating intrinsic values, the earnings yield band, other timers, and a summary of the EquitiesTracker Plus analyst investment system. The key points in Part 4 are that Mr. Market determines price whilst Mr. Accountant determines value. Price-to-value ratios must be compared over a period of time, and each stock often demonstrates certain price-to-value bands that can be used as a timing indicator. To be successful at investing, we have to learn to be rational, and a system of rational investing is crucial for investment success.
Part 5 will cover portfolio execution and introduce the following topics, namely portfolio construction, setting up a watch list or radar screen, and finally portfolio simulation. This is a free preview of EquitiesTracker's Course 101. To attend our courses, please go to the events page at EquitiesTracker.com. See you soon.